Hello everybody, today is February the 13th, 2026, and we're gonna look at what the market is going on at market close. So first up, we have Apple stock. Has the worst day since April as iPhone maker face FTC scrutiny. So main thing is like the Siri is delayed, right? So it is pushed back to about May and potentially later. So the Siri is a partnership with Google. Everybody knows that Siri is not that great. I don't even use it that much, but right now they're pushing it back, and it made the stock drop 5% on Thursday, and basically wiping out the gains for the year, leaving it down like 4% in 2026. Even though recently I read the news that the Apple iPhones were pretty good in China. They were selling very, very well, and I think it was the only one iPhone that was up compared to like the homegrown like models like Xiaomi and Huawei. And then also another thing that Apple got hit was Federal Trade Commission Chair Andrew Ferguson told Apple CEO to review the terms and service and creation policy of Apple News. So they think that the Apple News terms and condition is not working out that well. So they got hit by the FTC on that too. So it just double shot on Apple and the stock. Now it's down 4%. What you guys think about the stock? Is that still a good buy? Everybody is still buying iPhone. I think it's kind of like the Siri is very important to people, like, because AI is going really, really well. But I don't think it's hurting the sales that much because they download the iPhone. It's the status symbol. Then download it, and the iPhone is fast and very, very easy to use. And without Siri, I think people are still gonna use it, right? It's just that social status symbol, right? Next up, we have Xiaomi. This one is very, very big because the car actually outsells Tesla Model Y for the first time, right? So the Xiaomi YU7 SUV ranked first in China sale last month with 37,000 units sold, twice as many as Tesla 16,884 Model Y. Why is a big deal? Because you can say that in the past, a lot of cars already outsold Tesla Model Y. But this is the first time that a car that is priced similar to Model Y that can outsell the Tesla. Because this is a very well-made car. But I don't know, like, is it safer than a Tesla? This is kind of like for you to decide. Like, in my opinion, I don't know, it's safer than a Tesla, but it is great looking car and great in the interior, and the Xiaomi brand is very, very strong. So here's some more bad news, like the Model Y, which is best selling model in December, plunged to 20th place in January among new energy vehicle. It also fell from first position to 7th over the same period. So I am not sure why it's just dropping that much. So the YU7 is the second electric car by the company, and the first one is a sedan, right? And it's only half a year old, right? And it released in the summer of 2025. It's already gaining a lot of ground in China, beating one of the top kings, Tesla Model Y. So they also launched the car 1,450 below the Model Y in China. So it's like a consumer, right? You go and look at Model Y and you look at the YU7, and it's $10,000 less, and you get everything you have with the Model Y. You got the front, the really great interior design and the really great facelift. And yeah, it is Tesla, in my opinion, is in big trouble because of the fierce competition, right? They got the Neos, the Xiaopeng, a lot of cars coming out that is competing against the mid-size SUV, and Tesla is facing a lot of competition, right? And I'm glad like the sale is still going pretty well because Tesla released the 7-seater Model Y L, right, to compete with the larger segment SUVs, but it's not easy right now because so much competition going on right now and in the market. So yeah, that's kind of like the position and Tesla is in China. Hopefully it'll go up more. But right now Tesla, the stock, is not dropping that much. If you look at the stock right now, it's still doing pretty well. Let's see, Tesla Right? Overall, it did not have like a big drop. Kind of in the market, it's still the highest was at 435, and now it's going at 417. So relatively, it's doing well because there's a lot of hype, and Tesla full self driving, like they're releasing it in Austin, Texas, and then also they expanding it with more cities like Seattle and California. So a lot of people are not betting on like the sales of Tesla vehicles, but they mainly betting on the release of autonomous vehicles. All right, next up we have a trucking. All the truck stock has been dropping really bad. Why is it dropping? It's because there is a company called Algorhythm, right? So it's a SemiCab platform, an AI-driven automation system built for shippers and carriers, allow customers to scale freight volume by 300 to 400% without adding staff. According to the company, individual operators using SemiCab can manage more than 2,000 loads a year compared to the industry norm of about 500 loads per broker. The platform automates network level planning and decision making, which algorithm says lower cost per load, reduce administrative work, and boost asset utilization as volume grows. So after they release this, right, the CHRW, the Robertson Worldwide dropped 15%, Landstar dropped 16%, and then JP Hunt dropped 5%. Like all the transportation company drops pretty good amount because they think that AI is replacing them. But in reality, like I don't know, there's a lot of fear. So if you look at the stock right now, okay, this is the stock, and it's pop 332% as we speak today. But if you look at their revenue, they did about 8 million revenue. They don't have a lot of customers yet, and they're not scaling to hundreds of millions of dollars yet. But there's so much hype in the stock that the legacy truckers, they think that it's gonna replace them, but it's not yet. I don't think it's happening right now. Like they're not really growing the revenue. They're still at a loss right now. Look at the pretty good amount of loss right now. They're not profitable yet, and the revenue is not growing massively to like 50, 100 million, or 200 million per quarter. That's when I see like a huge kind of hit. But right now it's still in a lower, kind of slower growth, in my opinion. So there's nothing really to kind of worry about, in my opinion. It's just kind of like almost like a nothing burger. So if you look at the revenue and the cost of goods sold, and yeah, not really working well that yet. Still, but a lot of people are kind of riding the hype train right now and buying the stock, making some easy money, which I totally understand. And next up, we have Applied Materials. Stock soar on robust AI demand and upbeat outlook. So the company reported first quarter non-GAAP earnings per share of $2.38, comfortably beating the 21 analyst consensus. Revenue reached $7 billion for the period, exceeding the $6.87 billion anticipated by the Wall Street, despite a 2% year-over-year decline. So revenue did decline a bit, but it got very good kind of AI demand. Applied Material delivered strong results in first quarter, fueled by accelerating of industry investment in AI computing, said Gary Dixon, president and CEO. He further noted that the companies expect to grow semiconductor equipment business over 20% this calendar year. So that demand is still very, very high. And yeah, every single industry is building, like the data centers, like the Google Meta, everybody is building OpenAI. They want data centers right now, and analysts in the market love to hear that Applied Materials is taking full advantage of that. Let's see Applied Materials and what their stock is at right now. Applied Materials right now, they're up 8%. Wow, that's very good. After the news, it was up 1 point at 367. It dropped a little bit, but the demand is very high and it's growing very, very nicely. We'll see how that goes. Well, 6 months, it went from 160 to 54. So this is a stock that is growing very fast and it's up 92% for the year, and 5-year chart is up 200%. So the AI demand really kind of helping Applied Materials very well. Next, we got Pinterest, which is kind of the opposite of Applied Materials. So the stock sink nearly 17% as tariffs hit earnings. So the company reported Q4 earnings of 1.32 billion compared to consensus estimate 1.33 billion. Right, it didn't meet the consensus estimate, and net income plunged 85% to 277 million from 1.85 billion the prior year. It recorded 541 million in adjusted earnings before interest and tax EBITDA, below the 550 million that analysts were projecting. So cost was going out of control. It's essentially 85% down in net income. So first quarter, Pinterest expect first quarter sale to between 951 to 971 million, which is below what analysts wanted, about 980 million. So the company, the CEO Bill Ready said that absorbed externalist shock this year related to tariffs, and was more exposed to reduced advertising spend from large retailers. So CEO basically saying that retailers are not advertising that much because of the tariffs. Right, it's expensive. They don't want to buy anything from international countries, and now there's less advertising demand. Pinterest also announced plan to reduce layoff of 15% of workforce and cut back on office space and embed to go all in on AI. So that's kind of like the main thing right now, that everybody want to just reduce kind of the layout, reduce headcounts to reduce costs, and using AI to drive demand, drive like cost, drive down the cost. So if you look at Pinterest right now, the stock. Okay, so Pinterest, oh my goodness, down still about 16%. Now let's look at 5-day chart. So it's not looking good so far. So what do you think about the stock so far? Would you think this is a buy right now, or would you think it's a feeling stock? And let me know in the comment section below. But yeah, that is the end of the video. If you enjoyed the video, make sure to give this video a big thumbs up, and don't forget to hit that subscribe button. My name is Kelvin, and I'll see you guys next one.